Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be your daily cryptocurrency market update. Hopefully, you've all had a great start to your weeks. We've got some breaking news to get into in regards to the Bank of England that have essentially decided they are going to double the amount of QE or support they are going to give to their bond market. This is something that we've spoke about. All central banks right now are between a rock and a hard place. They either implode their debt markets, which we're already starting to see. We saw it with the UK bond market last week, which led to the Bank of England having to step in. This kind of really bolstered this pivot narrative. Okay, maybe this is the start of central banks pivoting. Then we had a good non-farm payroll job number for the US, and this really cemented the fact, and we saw interest rates actually get priced in a lot more harshly than prior, and it kind of killed this pivot narrative. However, the Bank of England are now saying we're actually going to double the amount that we're going to actually give to the bond market in order to support it. And really, it's a choice right now, like I say, between imploding your debt markets. Remember, when currency is issued, when currency is printed, that the currency in the UK's case, it would be the pound, is the asset, and the debt is the liability behind it. So when money is printed, it is essentially debted into existence, and the bond market and the treasury market is a representation of that. Those debts are essentially secured by taxes, by the government, so by people like me and you, and those markets are going down at a rapid rate. And we did speak about this and highlight this, that the Bank of England essentially intervened, and then we've seen a sell-off since then, which is now forcing them to have to step back in. Why is this relevant? Why is all this relevant? Just like we said, why is the non-farm payroll relevant? Because it's moving our market. We are dancing to the macro beat. And I know it's becoming a bit of a meme now, but we've been talking about the macro environment well before many. But the macro environment is absolutely bleak. And in my opinion, it gets a lot worse. We are only starting the QT cycle, the quantitative tightening cycle. And what you've got to remember is really since 2008, we've been in QE, QE, QE. So printing, stimulus, support, printing, stimulus, support, printing, stimulus, support. That rug has now been taken from underneath us. And we're already starting to see record number of defaults. This is mortgage collapsing, or certainly the interest in mortgages. This is from the ECB, concerns about potential wave of defaults on banks, because people don't necessarily want the debt, and they certainly don't want the debt instruments like the bond markets, which is central. You know, the biggest markets really in the world, other than the FX market, is government debt markets. These fixed income products are no longer appealing with such high inflation. So not only do we have liquidity getting really drained, and it's all relevant to the crypto market because it's dancing to that beat, from a point of view from debt being more expensive and money having to find its way back into the debt markets. You know, debt markets are trillions of dollars. If you do a 25 basis point rate hike on that, it's a lot of money. That money now has to find its way back into servicing the debt. But we've also got inflation, which is massively damaging and makes debt extremely unattractive. So we've got two exceptionally negative forces, and we will talk about Bitcoin because Bitcoin's on this kind of cliff edge, in my opinion, that really we're just waiting for a spill. We've essentially done our day trading for the day. We made some money this morning before 10 a.m. In fact, you could take that as a day's work. We do have some swings on, and they are all to the downside. There is a bullish possibility that we say I can never rule out it going either way, but I will have a bias and I will have a probability-based sort of dog in the fight, if you will, in which way I think it's going to go. So there is this sort of argument that maybe this is some sort of a double bottom. You do have slight bullish divergence on the RSI. It's a lot more prominent and potent, I guess, on the weekly. You know, you did put in a new low, but actually a higher low on the RSI. So that is potentially a bullish sign. But for me, with everything going on, I mean, just this morning, this was an update in regards to what's going on with the Russia-Ukraine situation. Multiple large explosions hit center of Kiev. Putin calls Crimea bridge attack terrorism. So this is still a real risk, and this is almost an external factor to the sort of systemic financial risk that we're talking about. And the fact that we're seeing the Bank of England have to step in and do this with inflation so high turns the pound into kind of a bit of a banana republic currency. Because what they're essentially doing is they're going, oh, inflation's insane. We've proliferated the money supply. We need to stop that because everybody's getting killed as a result of it. Their wages haven't gone up in comparison with it. We need to essentially you know, bring down inflation and sort of bolster our currency. And then at the same time, they've gone, oh, well, we'll also print loads of money to support people's energy bills. And which I think, you know, they have no other choice but to do. People just simply couldn't afford those energy bills. And you'd see a wave of people that just would outright not be able to pay them. So they needed to do that in many respects. But also now they're doing stimulus towards a bond market. The stimulus that they'd already put in place was twice the defence budget of the UK. I think it was $67 billion. They've now committed double that. So this is going to be bad, in my opinion, for the pound. Certainly in the long term, we're seeing the FTSE down today. We're seeing the Dixie actually somewhat up. Remember, this is a dollar story, ladies and gentlemen. We have said that you were going to run into resistance in this grey box. You just about got into it, and we did see a really sharp wick to the downside, almost a spinning top. But now we are reclaiming and actually looking like we are going to potentially put in, depending on how this week goes. I'll just check the daily to see if we put in a new daily close. We haven't yet, but we may actually end up putting in a new weekly close. And it does look very much like the dollar is on its way to 120. And why is all this relevant? Well, we know what the correlation between crypto and the dollar is. And there's more of a correlation, in my opinion, between Bitcoin and the dollar than there is the S&P. So there's a huge correlation between the S&P and crypto. The futures market, by the way, are in red, but not massively. So it's going to be an interesting day, certainly around that US Open. We'll be watching it. So we know what the correlation really is here. So this is why all this is important. Talking about the macro is so important because it's literally tag for tag. You know, it's sort of point for point in regards to these two charts. I mean, it really is, guys. You know, when one goes down, one goes up, and it's literally, you know, you could watch this on a minute time frame. It's so intangible. You'll have loads of algorithms, loads of bots watching this. So this is why everything that is going on is really relevant. The UK thing is relevant because this is essentially bad for the pound. We know that the DXY is, I think, nearly 50% euro. The euro is getting killed. We've seen Germany have to do a very similar thing to what the UK are doing, also with energy and now with the bond market. Good morning from Germany, where yields of mortgage-backed securities, so-called, I'm not going to try and say that word, have risen to the highest level since 2011. Consumers have to pay almost 4% for a 10-year mortgage loan, 4 times as much as the start of the year. Volume of mortgages, loans has slumped to 16% year on year. So seeing demand destruction across the board. And this is what interest rate hikes do. They make money more expensive, so people are less willing to go out and take those loans, thus sort of slowing down the economy. This has always been the objective, and this is in the name of fighting inflation. Both of these forces are massively wealth destructive. And people honestly think that crypto is going to enter a raging bull market here. Doesn't make much sense to me at all, ladies and gentlemen. And this is why we're talking about this, because this is the driver, and we know for a 100% fact that this is the driver of markets. Bitcoin isn't selling off because it's bad tech or it isn't revolutionary. It's selling off quite literally to the macro tune. Fed funds probably isn't the best way to show this, although you can see, you know, it sold off in preempt of, and if you look at actually the you know, pretty much close bottom, or when market started to bottom, it was when interest rates were going down back in 2008. So there's always been a correlation here. It's just more so apparent now because we have the same players that we have cross market involved in our markets. So you can see the market sold off in sort of preempt of the Fed fund rate, but it's actually a lot more correlated to. Where are we? Let's look at the 30-day Fed funds futures. Let's get rid of that and overlay Bitcoin. So this is really the driver of the story. People know that this was going to take liquidity out of the system, and that essentially, you know, Bitcoin and risk on assets across the board, you can add the S&P to this or whatever it is, really just followed in tandem. So we know that this is the driver of our market. It's why it's so important to pay attention to this. You are going to be a damn sight ahead of the pack if you understand and can do cross-chain analysis. Which is why when I do TA on Bitcoin, or if I take a trade, I'll check the dollar, I'll check things like gold, I'll check how other markets are doing. Usually I watch the Asian market first, then into the UK market. And of course, last night we were watching the futures market, which gave us the kind of go ahead to short this morning. But gold is down 86%. So I think everything's going to get hit, guys. I think we're in for some real uncertain times where essentially you're going to have a flight to safety. That safety is going to be predeemed to be dollars, you know, most likely. I think the dollar milkshake theory is coming into play. However, this is a false hope because it's absolutely my opinion that the fiat systems are inherently flawed and inherently inflationary and impoverishing by their very design. A debt-based system where you can never pay back the debt has to be proliferated, which means that wealth gets destructed if you're holding the currency. It's why all your rich billionaires and multi-millionaires typically don't hold cash. Some of them do for events like this, but typically since 2008, they've just been getting free money given to them, putting it into yield-bearing assets like the fixed income market, which is why the fixed income market, the bond market, has essentially just been in a 40-year bull market. It's kind of a no-brainer. But now you've got that issue where you're having to pay more for the money that you may put in there. You've got inflation that's killing off the actual buying power of that value. Nobody wants it, which is why we're seeing banks across the board have to really step in and actually bolster up their markets, taking us into this kind of Japan-style economy. You know, things are bleak, ladies and gents. Let me just make that absolutely apparent. I know it's a meme, this whole, but the macro, but, you know, if you really understand what's going on here, you'll understand that the dollar has every reason to continue going up. That's going to be bad for Bitcoin, you know, and risk assets that are still yet to bear the full force of what's going on, still have liquidity to be drained from them, not because people necessarily want to, but because, you know, liquidity has to come from somewhere, and it's going to be these asset classes. And unfortunately, Bitcoin with, you know, just under $1 trillion in terms of market cap is going to get hit quite severely, or the cryptocurrency market, just under $1 trillion of market cap, could get hit quite severely. We're already seeing altcoins, some of them, very small ones, just consolidating. It's because nobody's interested in trading them. And actually, I think why we've seen Bitcoin sell off to a lesser degree on Friday than the NASDAQ. Let's just take a look and actually recap on the NASDAQ and the S&P's close. NASDAQ closed 3.8% down and the S&P 2.8. Things like Apple were down 3.6, Amazon 4.7. You know, it was a brutal day, and Bitcoin hasn't been selling off in the same manner. This was from Lynn Alden back in April, and we were actually tweeting this around about the same time. The Fed is going to tighten monetary policy until something breaks, something like the Treasury market liquidity or credit market liquidity. Liquidity. Why liquidity? It's kind of like a well drying up. You know, they printed all these dollars, everyone's dollar flush, liquidity's throwing nicely, and now they're going very, very sharply, sharper than, you know, really any time other than when Volcker did it in terms of interest rate hikes. They're now going, okay, we're diverting all that liquidity back to paying the debt markets, and also that liquidity is going to having to, you know, utility bills for the masses, which is all wealth destructive. While ISM PMI is declining, being defensive makes sense until pivot occurs. A diverse-based mix of cash, gold, defensive stocks, and equity. So she's really referring to a lot of commodity stocks, refineries, stuff like that. Lynn Alden's great to follow. And she's talking about this pivot. So this is why markets keep kind of catching this beard, and then the Fed keeps sort of slapping that taste out of their mouth, is because this pivot narrative continues to reoccur. You know, and people go, oh, you know, the Fed definitely can't continue this. Well, they're set out to do so in the name of fighting inflation. This is going to be a massive week because we have the FOMC minutes released on Wednesday. It starts on Tuesday, but will be released on Wednesday. And then the big one, guys, is the CPI, the US CPI. We also have the Chinese CPI. Is it the UK PPI? I can't quite remember. I went through this yesterday with my Patreon members. But we've got the US CPI coming out, which essentially is set, or the forecast is 8.2. So the prior one was 8.3, and the previous one before that was 8.5. So even though it came down slightly, and anything above 8%, above 7, above 6 is really bad. So we're not seeing that kind of massive decline, and there is a lagging effect with interest rates, but there's also a damaging lagging effect with interest rates, not just a good one in terms of killing off inflation. That inflation killing aspect comes from demand killing, which we're seeing show up very aggressively in the property market, and markets across the board. Certainly the debt markets are really bearing a big brunt of it. So if we do get, remember, we sold off pretty harshly on a 0.2 decrease on inflation. Core, however, month on month, I think was up 0.1. If we get a 0.1, remember the last one was 0.2 and we sold off, decrease in inflation, you're going to sell off again because it's showing that what they're doing, you know, it's not having that much of an effect. They've got a tight labor market, which is why we saw markets sell off on Friday. Maybe gives them the go-ahead to be and continue, you know, pricing in maybe 1.25% in terms of interest rate hikes by the end of this year. That is severe and takes more liquidity off the table. What has the effect of them raising rates been so far? We've shown you. You know, we looked at the 30-day Fed fund futures. You can look at the euro dollars, which prices in interest rates. We can just look at the Fed funds. You know, this going up has caused markets to go down. It's set to continue going up. And this is the issue that I have with people calling for a bottom. That's just the interest rate side of things, not to mention the inflationary demand destruction side of things. You know, and if you up interest rates, you need more dollars to pay those interest rates. It's a self-fulfilling prophecy. Lots of countries out there are in dollar debt. You know, it really spikes the dollar. So it's going to be a very, very interesting time. It's going to be an interesting winter with everything going on with the sort of supply chain issues. And that's without any external risk really taking place, like what we mentioned this morning, taking place over with the Russia and Ukraine situation. It's not for me to comment on. I'm just showing you, you know, what's kind of floating around in the media right now. The Bank of England stepping in, like I say, is significant. You know, the central bank announced on Monday, so today, which is the 14th of, which is the 10th of October, that it would introduce further measures to ensure an orderly end to its purchase scheme on October the 14th. So they're thinking about cutting this in a couple of days. Just doesn't make much sense to me. What do you think is going to happen when they do that? It's going to start to sell off. In fact, it'll probably sell off into that as people will preempt it and try and get rid of it and fly to better capital allocation that's going to offer them a better yield. What have we not spoke about? We've got the mortgage rates. We've spoke about the ECB. Some good news is that we still see crypto adoption taking place. So why we really stress the macro is it's the macro that's driving things. It's not Bitcoin's fundamentals or the cryptocurrency market's fundamentals. It is so revolutionary in nature. You know, it is an absolute revolution that we're a technological revolution akin to the internet. Wells Fargo said it was akin to electricity and that we're moving towards this internet of value. It is massively revolutionary, the technology that you know, we're all interested in and want to be investors in eventually. But for now, we're dancing to a sort of a bigger tune, however, or bigger markets. However, we do see crypto adoption absolutely accelerating. And I do think one day people will go, hang on, screw this. We're not going to hold dollars. We're not going to hold bit systems that can be proliferated and are inherently flawed. We're going to have to move to something else. And I think, you know, it's way too much of a coincidence, in my opinion, that Bitcoin came about in 2008 and we had this kind of alternative money system thought up. But over 12,000 Brazilian companies declare crypto holdings in record highs. August figures realized by Brazil's tax authorities reveal over 12,000 companies have cryptocurrency holdings, the largest amount ever recorded. This is going to be a trend I think we see continue. Metcalfe's law, you know, for me is the real value with Bitcoin, the people using it, and likewise with Ethereum. Some other news is making now votes to allocate $500 million, so $500 million into US Treasury bonds to back their stable coins. Yeah. How does that sit with bond markets doing what they're doing? You know, if bond markets continue to sell off, I get that this is going to, you know, give them a kind of seat with regulators, but at the same time, you know, we've got treasuries, we've got debt. You know, the US in this case is still thinking about or supposed to be doing QT in terms of reducing their balance sheet, getting rid of treasuries and bonds, and you know, not only not buying them but dumping them onto the market. How's this going to affect the peg? Certainly if DAI comes down, certainly if Ethereum comes down, or not DAI, sorry, because DAI is obviously stablecoin, but if Ethereum comes down, if, you know, it's going to be interesting. I don't think this is the smartest move in the world, but certainly something that I will watch. Could be good for them, you know, certainly if we do get a pivot and things turn around. But we're not there yet, and I would certainly be very careful. We've not really spoke a great deal about Bitcoin because I really wanted to get sort of out to you guys what's happening this week. But to me, you are very much just grinding here, guys. You know, you're doing, I'll try and find a clean-ish chart. You're essentially doing the same thing that you did over here before you broke, that you did over here before you broke, that you did here. You're doing very much the same thing. You've sort of formed this base, and there'll be so many stops in here and liquidity built up, by the way, guys, that when you take this, which is actually one reason why I think Bitcoin has held this level so sort of valiantly, is just simply because of how much liquidity is built up under here. And people have a vested interest in not losing this level. Once you take this level, you're heading straight to the downside, guys. And in my opinion, and we have a head and shoulders target that we're looking at, head and shoulders don't just typically have to, and they are great reversal patterns in a trend, but they can show up elsewhere. For me, I think this is your head and shoulders that you're essentially looking at. This is something that we've been speaking about well before we even put in this right shoulder when we came down to 18,641. We said you're going to get a short squeeze here because people are too aggressively short. We're seeing record inflows. You did indeed get that. And now, you know, we're back here, and that's very telling, I think. And in my opinion, we're just waiting to break this. And I think if you do break this, and I've seen lots of other targets for 13,800, no idea how they've got them, but our target has always been 13,800. This is where we think Bitcoin is headed. And in my opinion, it's not going to be too long. We've got the midterms coming up, so it's going to be very interesting to see how that affects everything. But the main message that we've had really since 44K, guys, is just be safe. You know, it's my absolute opinion that you don't want to be an investor in this market right now. You want to be an investor. Remember, none of this is financial advice, just my own opinion, in this asset class, because it's going to absolutely take off, but when the time is right and when the price is right. For now, and it's actually not only have we been out of crypto largely, we still have a lot of exposure to the cryptocurrency market, but it's a small percent of our overall allocation. We are dollar stablecoin heavy, which is insane to say for a channel called All in Crypto. However, it's paid us to do so, and I'm just telling you guys what I'm doing, honestly, and what I see coming down the road. And I do think you're just bouncing along this sort of line here, sort of 18K up to sort of 19K. I don't think it's going to be too long before you break it. I think once you do break it, what the catalyst for that may be is really anybody's guess. You're going to do it with significant momentum. So today, we'd still potentially buy a short. It's going to all really depend on the US Open. It's going to depend on how the dollar does. Gold is down, like I say. FTSE's clawing things back. This will sort of be on the back end of the Bank of England news. And we will see what takes place. We've got some breaking news here, which we can read whilst we're on here. Nobel Economic Prize Award to Ben Bernanke and 2 others for work on financial. Not really sure what this is about, but yeah, I'm gonna love and leave you on that note, guys. This has gone on for 22 minutes, so it's been a super long video, just lots to report. It's Monday. We want you guys to be prepared for the week ahead, and understand what's going on, and why, you know, we maintain this further downside is very likely bias. All I've got for you in this video, guys, if you want to check out my Patreon, trade with me, get more of my investment thesis, also find out what I'm going to be investing in and what I'm looking at, you're welcome to join my Patreon. It's not for everybody, and there's no obligations to join. We want people that are willing and want to be part of the community, like-minded individuals. All I've got for you. See you in the next one, ladies and gentlemen. Have a fantastic Monday.